Happy Friday to all of you. With all of the fears surrounding the coronavirus, many are talking about their portfolios and investments, myself included. So should we be concerned? I don't know. But this guy knows. Kyle Griege is a financial advisor with Merrill Lynch. Good morning to you, sir.
Morning, Laura.
So happy to have you here because my financial advisor, who is with Merrill Lynch, has been sending me emails for the last few weeks talking about some of the concerns. So what are the biggest concerns right now?
Absolutely. I think the biggest and most relevant concern at this point is the severity of the market decline that we experienced. You know, specifically when investors are looking at their account balances and they feel like they have lost money, right? And we're getting major daily swings in the market and lots of volatility. Well, the reality is you haven't lost money until you sell, right? So if you buy ABC stock at 100 and today it's at 70, you haven't lost that $30 difference until you sell at 70, okay? Everything else is purely the market value. So gains and losses are realized at the sale. Naturally, this can evoke emotional responses, right? But the key is to maintain perspective, really think about the long term, and not make purely emotional decisions.
It's hard, though. These are conversations I've had with my parents a lot over the last week. So when they do get volatile, just write it out. That's your suggestion?
Yes. So, the first thing we do and advise clients to do is think about the big picture, look at the long term. Do you think the market's going to be higher in 5 years than it is today, in 10 years, right? That's a really important starting point. The next thing we do is ask the following question. Is your investment strategy driven by a financial plan that reflects your goals, both short and long term? Okay. If your goals haven't changed, if your time horizon has remained the same, and if your risk tolerance has remained the same, then there shouldn't be any significant changes to your investment strategy. You might rebalance, you might tax loss harvest, but overall, you won't do anything that disrupts or adds any risk to your plan. So if there have been changes, you need to revisit that.
Something I've been thinking about, though, should I be getting on the phone to my Merrill Lynch advisor and saying, hey, can I give you more money to put into the stock market right now since the rates are, or the prices are low? Is that something you would suggest?
So that's, once again, there's not a cookie cutter answer to that. That's completely on an individual basis. And at that point, once again, you're looking at what is my time horizon, what is my risk tolerance, what is my overall financial plan, what is my liquidity need right now and in the future, because you don't want to put yourself in a position where you're risking money that you can't afford to risk.
Very true. Kyle, good to see you.
Thank you.
Kent, it makes sense. We have advisors for our health, for our cars, for everything. You should probably get one for your finances.